At the end of session markup for London and New York on July the 12th, Wednesday. So we have the 4-hour chart in front of us. In fact, let's get to the daily. What happened on the daily? You saw the price has been just creeping up. We had the break of structure on the daily as well. We had the demand zone pulled back into the demand zone, and since then it has just been pulling up. Not much information over here in terms of execution, but it gives you the bias. The market is in an uptrend. Let's look at the 4H. So we came in today at as so right here. Yeah. At this point in time, the market has been slowly creeping up. Yes. And I don't have much information on what do I need to do from looking at the 4H. I'll put a link in the description for my pre-London analysis, but the anticipation was a pullback. And for that pullback to happen, we were waiting for 1H chalk. And if that happened, we will look into the entries for with the new supply zone that was created. So let's look at 1H and what happened. So when we came in this morning about there, 9 o'clock, at this point in time, I was just simply waiting for the chalk to happen, this line over here, and I had set my alerts. Let me zoom that out. Okay. And the intention was that if a 1H chalk happens, we'll have a new supply zone created. The price pull up here gives us an entry model, and then we head towards the equilibrium or the discounted part of this 1H swing range, right? So we're trying to play the internal price action at this point in time, because there's nothing, there's just one big push, small pullback, and a push. You can classify this break as a 1H swing leg break. But for me, it isn't a substantial pullback. I would rather prefer that the price pulls back all the way to the EQ of the range or somewhere close by. But in this case, it was a 1H chalk. It gave us an indication that it's running bearish. We had a demand over here. I did say that the demand is sort of weak because it was in the premium. I wasn't looking to buy from here. It was in the premium of the range. If it gave us a very clean entry model, I would have thought so. But since the price entered into this demand, and if it had pulled back, waiting for confirmation would have been best. No risk entries over here. And you saw what happened, right? So as soon as So as soon as it hit here, we had the high impact news, and boom, it just destroyed this supply zone, and it kept pushing up, and then suddenly, end of session and the market died. So the point here is, the lesson learned here is that after a significant break of structure, we had the 4H boss, which is very much aligned with the 1H right now. This was the 1H boss and the 4H. They're on the same places, but the swing ranges are different. The lesson learned over here is that after that break of structure, the price can keep going considerably higher than we think, right? And the intention is to make sure that we have a confirmation for that price action to turn bearish in this case, rather than anticipating or predicting it's going to turn bearish at a certain point and putting in a risk entry, right? So here, coming in tomorrow, I will be watching what happens. Ideally, I would wait for a 1H chalk to break here. So this is why I have this orange line with an alert that you have the 1H chalk, which means the price is ready to pull downward, giving me a new supply zone over here. And then once the new supply comes in, we wait for the price to pull back into it, give us our entry model, and then boom, we go. Ideally, we would be in a premium range if that happens, of both the 1H swing and the 4H swing, looking to target some of the equilibrium here or even further down. It could happen anytime because there's a lot of unmitigated zones on the 4H and the 1H below. All right, guys, that was it from my side. If you liked it, please subscribe, and I will talk to you tomorrow. Take care. Bye-bye now.